doesn't this kind of a market where the averages don't do squat hurt people who invest in index averages?
Well, the index is the market. I mean, the best index represents the whole market. And the whole market return, Neil, just to be clear about it, is the return that all investors get before their costs are deducted.
Right.
And, you know, there may or may not be such a thing as a stock picker's market. I'm not smart enough to know that. But I do know that for every stock picker who picks well, there is, by definition, on the other side of every one of those trades, a stock picker who picks ill. So a stock picker's market on balance, think about this, is always zero, less the cost of the croupiers.
That's actually a very good point. In other words, John Bogle, the legendary investor, was saying, why make it a crapshoot? Why do you have to select individual stocks when the people who do that for a living, by and large, cannot beat the market averages themselves? Fewer, and this is again in the mid-'70s when he came up with the Vanguard company, fewer than 1 in 10 at the time were able to do that. So he would just say, why don't you just buy the whole basket, the market basket? I'll give you an entry price of $1,000, $2,000, $3,000, which gives you an index, which gives you the S&P 500, or expanding later on to the Dow Jones Industrials, or the NASDAQ, or something that would mimic the overall market. And I'll do so at a fraction of the cost, because it's not what you make, it's what you keep. And John Bogle discovered that the allure of keeping more of the market return in and of itself was a dramatic return. Because keep in mind, with a lot of these mutual funds and people who manage money, they quote a figure that really doesn't adjust for the cost of you doing business with them. Now, it might not have endeared, well, John Bogle to that community, but it certainly endeared him to average investors who wanted to participate in something called capitalism. Mr. Bogle died. He was 89 years old. He was and remains a giant of investing. He democratized a process, and he was a calming force. He would always say, why should I get excited when all the cable business shows are doing that and then some for me? He would zing you, but he would remind you that the trend is your friend when it comes with investing. That message, and it's a timely one now, with Gerri B. Smith, Gerri Willis, Jonathan Hoenig. Jonathan, it's something we think about, but we don't think about enough. That caught up in the day's gyrations is the fact that over time, markets do well, stocks do well, market aggregates do well. And he just wanted to lead people to that rather than take hunches, right?
Absolutely, Neil. I mean, amongst all the tumult of cable news hysteria, oftentimes, Jack Bogle was really a voice of reason, a voice of stability.
Absolutely.
And you could often basically say this was the Sam Walton for the investment world. Neil, before Jack Bogle popularized the no-load mutual fund, everyday investors had to pony up big bucks big fees, oftentimes 5-6%, what they call lows. Jack Bogle brought those charges down demonstrably, down to, in many cases, 0.1% to participate in that same investment. So this was a man who really democratized and opened up Wall Street, an exclusive boys club to every American.
No, you're right about that. And Gary B., the one thing I remember, whether you like the idea of someone who would just try to do the work that you're doing and say, you don't need to listen to Gary, just invest in this fund that mimics the performance of the wider markets. But more to his record is this calming influence. Through good times and bad times, he wouldn't get too excited in a boom. He wouldn't get too depressed. He would urge people not to look at their 401k and brokerage statements until they finally needed them well into retirement. The idea being, don't get hung up on this. What do you make of that?
Exactly. You know, his philosophy, Neil, I think is appropriate for 99.9% of the people with money that want to get into the market out there. You know, there's a book, kind of famous, I suppose, written about all the markets called Triumph of Optimism, and it showed that regardless of what market you were looking for, the stock market in Sweden or U.S., over time, invested in that country's stock market, even the world stock market, outperforms every other asset class. If you do nothing, just hold it. That was Bogle. He made it so simple. As Jonathan pointed out, he made it low cost. You know, the fund started, Vanguard started in 1975, just when I was entering college. It wasn't but a year later I put money into Vanguard and never touched it. It's just, you had them in your top 5, I would also.
I assume that's 1975 that you were starting college.
1975, yes.
See? All right, Gerri, it's funny, too, because when you think about returns and the way we, quantify how mutual fund managers are doing or even hedge funds and the like, you got to remember the cost of doing business with them. Sometimes there are very high entry fees and indeed exit fees, load funds, no load funds, and all. It's gotten very, very complicated. But those costs dramatically bring down, especially over the years, the return and the money you're making. He brought that to people's attention, and it forever earned him the wrath of many in the industry, didn't it?
Well, it's interesting. So Bogle focused on transaction costs, right, and brought them down dramatically, forcing the entire industry to do the same. 1975, he puts out his first index fund. That is the same year that brokerages are forced to deregulate commissions. The result, the impact on this industry, I'm standing here on the floor of the New York Stock Exchange, incredible. And yet today, the picture that you just showed at the top of this segment, it's right up here. It's a picture of John Bogle, Wall Street claiming him as their own. As you can see right here, a Wall Street legend. I think that's fascinating. I have to tell you, I interviewed Bogle many, many times as a personal finance writer and editor, and he was famous for saying, don't try to find the needle in the haystack. Buy the haystack.
Buy the haystack,
but don't
right.
be stupid, right?
That's exactly right.
It's very hard to pick the right stocks, the right funds. And one fact that we've mentioned over here over and over again, only 13% of active stock managers over time can beat the average, can beat an index fund.
Yeah,
so that is not a good track record.
Go ahead.
And Neil, most fascinating is it was really an uphill battle for most of John Bogle's career. Back in 1976, when he introduced that first index fund, people decried it. They said it was They said it was un-American to have an index fund, to have just have a computer, a passive basket. So he transformed not only the experience for individual investors, but as you said, the entire industry writ large.
And the entire investing public. Thank you guys very, very much. Just think about this. That used to be a ride only for the rich. He got everybody in it. He did it alone.